Okay. We completed till benefits of target costing now. Without saying, tell me what are the benefits of target costing. Hmm. You only told revise for study text. Cost control. Ah. Well, you consider earlier stages. What else? Okay. We will do. Today, what we will do? How many of you know to ride a scooter? Who came in scooter today? How many of you know How many of you know to ride a scooter? You know. We first will have class till 10 o'clock. Then go eat and come. Then I'll tell you what to do. Okay. Now we'll proceed. Okay. Next part of theory we're going to see something called as value analysis and value engineering. You can close your books for quite some time. We have a lot of things to complete in theory. Books are not required. So we are going to see value analysis and value engineering. Have you seen this term anywhere?
Yes.
You've seen this, no? You see this one only. You've seen this, no? It's not my subject. Okay. What do you mean by value analysis and value engineering? Tell what is value analysis and value engineering? Value analysis. Okay. First, when we start a business or when we do a business, we should not focus on what we can give to the customer. What we generally try to do is, we only focus on what we can give to the customer. I can give this packing more than I can give this packing, more than I can give this packing. I'll give this box to customer, I can give this to customer, this to customer. You should see what the customer wants. You don't see what customer, rather than you see what the customer wants and try to give that. Other products you remove it. Suppose in front of my shop, I am keeping a live jalebi counter. For that, I have to appoint some person. I have to put electricity there. I have to put gas there. Thinking customers will enjoy it. But customers actually don't want that. So remove that. I am giving a product on burger. For that, I am putting one box. On top of the box, I am putting one more box. I am putting one big cover. But what customers actually want is environmental friendly products. Customers want that. And you are giving something what you want, thinking customers like it. So, value analysis or value engineering, both, it means you focus on only those activities which add value to customers. Other activities don't even focus. So, what do you mean by value analysis and engineering? Focus on those activities which add instead of telling add value to the customers, which add value to the product or service. Focus on those activities which adds value to product or service as perceived by the customer. I will say, if I put more covers, it adds value to the product. I will say it adds value to the product only if it's perceived by the customer. So value analysis or value engineering means those activities that add value to the product or service as perceived by the customer. That word of as perceived by the customer is very, very important. Tell again, value analysis or value engineering first focuses on activities. Tell value analysis or value engineering focus on activities that add value to the product or service as perceived by the customer. Tell again. Analysis or value engineering Focus on activity that add value to the product or service as perceived by the customer. Very, very important. So then what is the difference between value analysis and value engineering? Nothing. If you already have a product, if you are focusing on that now, it is called as value analysis. Already I am giving burgers, further I am having box. I am saying whether those activities are adding value to the product or not. That means it's value analysis. New product I am going to introduce. Further I am thinking what to do, what not to do. Already have a burger. Further I am giving burger box. I am giving this thing, that thing. I am giving extra sauce, this thing. I am seeing if those activities provide any value to the product or service. Add any value to this product or service means it is called as value analysis. New product. Some new product I am going to introduce in the market. Further I am sitting and deciding whether it's this activity, whether I have to do this, whether I have to do that. If I think about it, it's called as value engineering. As you said, value engineering, other word is called as also re-engineering. Understood? So this is called as value analysis and value engineering. So what you can write, value analysis relates to existing products. Value engineering is for new products. Write the definition. Value analysis or value engineering focuses on activities that add value to the product or service as perceived by the customer, not as perceived by you, as perceived by the customer. So what two questions you have to ask yourself? Only one question. But ask you, what do the customers want? But ask this question to you. What do the customers want? This is called as these 3 points you have to write under value analysis of or value engineering. Understood all of you? So what is the purpose of this? First, the customer satisfaction we can give. What other thing we can do? More customers, more profit, more sales. Okay. But what is the what other thing we get by doing this? Exactly. We can remove non-value added activities. I told unnecessary cover. We remove na. Suppose one huge cover costs 15 rupees. Customers don't want that cover only. They want only basic cover. If I remove that cover na, if I sell 1000 burgers a day, 15 rupees cover if I remove, and if I sell 1000 burgers a day, how much can I save? 15,000 rupees I can save. For 1000 customers, I am not giving that cover. So 15,000 rupees I can save just by not giving that cover. It's not required. So non-value added activities I am removing. So I can save unnecessary cost. So fourth point in value analysis and value engineering is I can save unnecessary cost by eliminating unnecessary activities. Understood? This is what you have to know with value analysis of value engineering. Now we are going to see something called as 4 types of value. What is the value of this pen? If I ask, what is the value of this phone? If I ask, everyone will have their own definition. Is it very cool? It's not cool. What is the value of this phone? Everyone will tell one thing. Someone who knows about the phone, what will he say? Hey, this phone has 4 GB RAM. This phone has this thing. So the value of this phone is this much. If other person you ask what they say, iPhone will be costly only. Actual value of the logo only so much. So iPhone means you can pay so much. If you ask another person what he will say, if you ask someone from a phone manufacturer what he will say, this chip costs this much, this glass costs this much, this costs this much. So value of this phone is only this cost, or the cost of this product. Some we'll also tell no. When you go to a restaurant, what you will say when you see people giving one burger for 300 rupees, what we'll say? Bun will be 15 rupees, chicken will be 30 rupees, sauce will be 20 rupees. Technically, value of the burger is only 55 rupees. If you ask another person what he will say, hey, this phone, this phone has so and so use. With this phone, we can do so and so activities. With this phone, let it be iPhone, this thing, that thing, whatever. But with this phone, I can take pictures, I can do this, I can do this. So value of this phone is this one. So everyone, when you ask value, will tell his own definition. Not every person says that. That's why they're given here. We have 4 types of value. All those definitions are classified into 4 types. You go ask anyone, Everyone will come under these 4 types. First one is called as cost value. So when you ask the value of this phone, they will tell the cost of this product is the value of the product. First one is called as the what value? In that, what is the value of the product? The cost of the product is the value of the product. That is one type of value seen with a different perspective. Second is exchange value. Second is
exchange value.
That is the amount the customers are willing to pay. Second is the amount the customers are willing to pay is called as exchange value. So what do you mean by exchange value? Before telling the difference, I'll first tell the next value. So what is the first value? Cost value. Value is determined by the cost of the product. That is, they say that is the value. Second is called as exchange value is what? What the customers are ready to pay. Very important. When I exchange this product to customer, I am exchanging, customers will give me something. What the customers are ready to pay is called as exchange value. Third is use value. USC. Use. What is use? What is use? Not that. Use is present value. You will see from only a seller's perspective. A future use, you can't put monetary terms for it. Machinery will get something, for that you will take future value. For using it, you will not take future use. You can monetize it. Use value means what is the value of the phone's function. Phone is 2 GB RAM. Camera 1025 megapixel. Snapdragon. So and so. For this qualities, what is the actual value of the phone? Let it be iPhone, Moto, this thing. For this specifications, what is the value of a phone should be? That is called as use value. Understood? Let it be iPhone, whatever. iPhone has 5 GB camera, 20 GB camera, 20 megapixel camera, this thing, that thing. For that, what is the actual use value? Understood? Value of its function. Understood? That is called as use value. So what is the difference between use value and exchange value? Customers will be ready to pay what is the use value only, no. But the difference is, mostly customers will be ready to pay only for the use value. But the difference between this and exchange value is, first, Maggi. The use value of Maggi is based on the quantity, quality, whatever, we'll be ready to pay 20 rupees for a cooked Maggi. But what you're ready to pay in hill station, 50 rupees. So exchange value, that is 50 rupees. There customers ready to pay 650 rupees. Here customers ready to pay only 20 rupees. Because it's abundantly available. There it's less only available. So there customers ready to pay 50 rupees. Here customers ready to pay only 20 rupees. That is the difference between exchange value and use value. There's one more value called as esteem value. There's one more value called as esteem value. That is status. The value is ready to pay for status. iPhone, just for the name, it's ready to pay. Audi car, the specifications of a normal car and Audi car, or any branded car for that matter, technically you are paying extra 30 lakhs or 40 lakhs just for the name. A car with same facilities as an Audi car, whatever, Audi car or BMW or Benz, you are ready to pay extra 30 lakhs or 40 lakhs just for the name. That is called as an esteem value. Understood? So difference between use value and esteem value is, suppose a Varna is there, this is specifications are there, the cost is 25 lakhs. Audi car is there, same specifications but the cost is 45 lakhs. So use value of the Audi car is only 25 lakhs. The use value of Audi car is only 25 lakhs. But the esteem value of Audi car is 45 lakhs because that is, you are paying, ready to pay that for this status. Understood? That is what are the 4 values? Cost, exchange value, use value and esteem value. Understood the difference between all the 4 values are? Now, we are going to see one more thing called as functional analysis. We are going to see one more thing is called as functional analysis. Functional analysis is technically the same as value analysis. Not much difference. What do you do in value analysis? Focus on activities that add value to the product as possible with the customer, remove the non-value added activities so that you'll save some cost. Same thing we'll do here. Same thing, but we'll do for functions. Same thing we'll do here, but we'll do for functions. So what happens here is, I'll give you an example. I am an auditing company. I have an auditing firm in Chennai. What do we generally do? We'll audit for several companies, small clients. We'll have 500 clients. Every company minimum of 100 to 200 clients. I have 100 to 200 clients I have. What I will do, every month I will make sure I send them something called as a magazine. My own magazine. I'll make a magazine and I'll send every customer. For making the magazine, I have to enter design costs, research costs. Then I have to print it, printing costs. And I'll send it to the customer. Because of me sending it to the customer, what benefit I will get? As an auditing company, every month I'll send magazines to customers. What benefit I will get? Huh? First, regular updates you can give to customers. Sir, the magazine will tell what is happening in the real world. Along with that, we'll also tell we are providing so and so services. We introduce new services. We are doing this, we are doing that. That and all we'll put inside and give. So customers will get more awareness. So the function here is what? We are advertising to customer. In functional analysis, what you will see is whether you have to send a magazine and only we can do that, or any other alternative way is there which is less cost and it has the same function we can see. What is the function here? Advertising. We are doing advertising through what? By sending magazine to all 100 customers. Design cost you are incurring, this cost you are incurring, that cost you are incurring, we are doing. We have to see is there any other way in which we can do the same function but with less cost or better way. What we can do? Email. The printing, what you can do, this is email you can send. WhatsApp, regular updates you can send. Printing cost you can save. Understood? And customer will see also. You send magazine, who is opening magazine thing these days? You send in WhatsApp, they'll open and see also. So this is called as function. Whereas what you can see in simple words, what function analysis is. For a function, we can see if there is any alternate way of doing the same function without compromising on quality. Understood? An alternative way of doing a function without compromisation of quality. Understood? Understood value analysis, value engineering, types of value, function analysis. These are 4 things. We have a lot of theory to see today. Understood? These 4 are. Next, we have target costing in service organization. Same thing. Like how we have target costing in products, we'll have target costing in service organization. But only problem is service organization will be more difficult. What is target costing? Target selling price? We'll have target selling price. That's selling price you have to sell maximum in. And we'll know how much profit we want. That is target profit. If you reduce both, you will get the target cost. So the cost we have to complete a product in, we'll have our actual cost. So actual cost minus target cost will give you cost gap. This is what we do in target costing. So there we know what is the target selling price. But in service organization, it may vary rapidly. No, there we'll arrive at target cost. But in service organization, we'll have some problems. We can do target costing in service organizations also. But there are 4 problems in target costing in service organization. Very, very, very important. There is a separate concept called as target costing in service organization. That is not required. Let's tell for service also we can do target costing. Can you name a few services? Cleaning services, parlor services. What other services? Services. Restaurant is also service. Restaurant you don't sell products. Restaurant is also service. Restaurant you're providing service. You're not providing any products. Restaurant service, cab service, everything is service. For this, you will find the target cost that we can do something and we can work on something. But for service organizations, target costing will be slightly difficult because of 4 reasons. First is simultaneity. Tell me. Simultaneity. Simultaneous is there? No. Okay, simultaneous. First thing is simultaneous. What do you mean by simultaneous? Is service, product costing, what you do? Sorry, product, what you do? You manufacture and keep a product. You manufacture and keep a product. After 1 month, you will sell it. But the problem with service organization is manufacturing and consumption is at the same time. I am driving, he is enjoying the service at the same time. Simultaneously, both production and consumption happens. I am cutting hair, parlor service and giving cutting hair. That is production of service and consumption happening at the same time. So here you can't technically see where you can reduce the cost because same time it's happening, sir. Same time both is happening. After you manufacture a product, you know, okay, 30 rupees happened. What we can do to reduce, we'll do. But here both is happening at the same time. The first problem is they're saying it's difficult. They're not saying target costing is difficult in service organization. Sorry, they're not saying it's target costing is impossible. They're saying it is difficult. Why is it difficult? First point is simultaneous. What is simultaneous? What do you connect as simultaneous? Production and consumption happens at the same time. Understood? Second is heterogeneity. You go buy a soap and see, all soaps might look similar. Phone you open and see, this is all phones, they're looking similar. But service is not like that. Same burger, you go to 5 different shops and see, 5 different types you will see. That's a service. Cab or hair cutting service. One guy is giving for 100 rupees, one guy is giving for 1500 rupees. What is the difference? Service, it will vary amount. Service, it will vary rapidly. Service, one service and other service, it is totally different. Same cutting, same everything, but one is 100 rupees, one is 1500 because of difference in the service. So, heterogeneous product. Understood? Yes or no? Heterogeneity. Second point is heterogeneity. First point is simultaneous. Second point is heterogeneity. Heterogeneity, what you can write inside? Not every service is the same. Why is this difficult in target costing? The target costing, what we will do? We will go see how much is another phone. I'm Oppo, one of Vivo is there. I'll go so Vivo's phone cost, phone selling price. That target selling price I will take. Now me and Vivo we are producing the same product. Oppo and Vivo are producing the same product. I'll go see selling price and I will take. But haircut, I can't go see, that person is keeping 1500 rupees. I'll also keep 1500. Can you do that? You're starting a new salon. You're going and seeing a neighbor. The neighbor is giving 1500 rupees. Can you give it for 1500 rupees? No, because heterogeneity are it's 2 different services. Understood? Second is heterogeneity. What is the first point? Second point? Third point is it is intangible. Tangible, you can see, sir. This is 50 rupees. Chip is 100 rupees. Glass is 500 rupees. This is this much. So we can see, this is intangible, sir. We can't see anything. Understood? Third point is intangible. And fourth point is it is perishable. Fourth point is it is perishable. Understood? These are 4 points you need to know. If they ask what are the difficult or problems in using target costing in service organization, we ask. Right? 4 points. What are the 4 points? Simultaneity. We'll do the same word only. Simultaneity, heterogeneity, intangibility, perishability. Understood? Yes or no? This is what you have to know under service organization. Go through the theory, study till now for 2 minutes. Then you can proceed to the next concept called as life cycle costing. Sums are there. Fast. Are exam centers available in Chennai for PM?
Yes, sir.
Available? When is the last day?
So yesterday was for remote and so they extended it to now started at 10 so they extended it.
For both remote and center based. Okay. We'll proceed. Now come here. Now we're going to see something called as life cycle costing. We are going to see something called as life cycle costing. With the name only, leave everything, don't look at the book. The name only you tell what do you mean by life cycle costing. That's the life cycle of a product. But what do you mean by life cycle costing? Okay. What else? Almost. What we will do life cycle costing. Before telling you what life cycle costing means, let me tell you a story. What happens is, I start a new product. I using ABC costing, I found that the cost per product to be 1000 rupees. I sold the products at 1200 rupees. One thing I didn't realize is my product can sustain in the market only for 3 years. That's a very dynamic market these days. If you see what a product you start, it can sustain only for 3 years. If I start today, next 1 year they are starting another product with the same name, a different name, exactly same product they are starting. So I can sustain my product only for 3 years. So I sold through the entire 3 years, I sold 10,000 products. Now what is the total profit I got? Per unit cost is 1000 rupees. I sold for 1200 rupees. Per unit I am getting 200 rupees profit. Throughout 3 years I sold 10,000 units. So 10,000 into 200, 20,000, 2 lakhs, 20 lakhs. So throughout the life of the product, I got 20 lakhs. Is it good for the business or not? Cover. Cost is 1000 rupees, including fixed cost. Every monthly fixed cost, I added everything using ABC costing, and I got 1000 rupees as the cost. I sold for 1200 rupees. Per unit, I got 200 rupees. Throughout the process, I sold 1000 units, 10,000 units. I got 20 lakh rupees profit throughout 3 years. Is it good or not for the business?
Yes.
Good. Cost is same. This is selling price. This is what I incurred. Is it good or bad for the business? Good. Dynamic. 3 years after that I can do it, but 3 years I did this, I sustained, I got. Good or bad? But what happened is 20 lakhs profit I got 3 years. But what happened is before starting the product, I had incurred a lot of research and development cost. That will be 15 lakhs. I would have incurred initial marketing cost. You will allocate fixed cost what you incur only for that period. The fixed cost you allocated all these while. Suppose I am doing business this month. My variable cost this month is 20 rupees. My fixed cost is 1 lakh. That I will allocate what is the fixed cost of this month only. I will allocate this year's product. I mean, that's what you do in ABC now. Last year's cost you can put in this year. This year whatever cost you incurred, you took the total cost, divided the total number of units, and you incurred you allocated every product. Did you allocate the product which you incurred, design cost you incurred 2 years back? No. So, initial design cost, research and development cost, marketing cost, initial, before starting the product only. After starting the product, whatever cost you incur, only you'll take for ABC costing and you'll find out. That alone came to 55 lakhs. Now if you see, technically overall I got a loss of 35 lakhs. What is the problem? I took the cost of that month. Based on that I set a selling price. That month I got good profit. But I didn't realize that initially I have incurred so much design cost, development cost, that cost and all I didn't take into picture. So overall, as the entire business, I incurred a loss.
So relative costing concept
Relevant costing, you will not take that. Relevant costing also you will not take that. Why you will take relevant costing? Already incurred research and development cost is already incurred cost. You will not take in relevant costing. This is not relevant costing chapter only, no. That will not consider it. Not in any chapter you see, you will not consider all the incurred costs. Any chapter, have you considered last year's cost? We have done 6 chapters till now. In any of the chapters, have you considered last year's cost? You will take only this year what is the cost, this year what is the fixed cost, that only you allocate to every product. We will take variable cost and this year's fixed cost will allocated cost we will take the total cost. We will not consider any previous cost. In life cycle costing we will do. Because what they are saying is, in life cycle costing what we will do is, throughout the entire 5 years, take what is the total cost you will incur. Right from today design costs, today research and development costs, today marketing costs, today rent, tomorrow salary, tomorrow marketing costs, tomorrow variable cost, take all the costs you will incur. It's not an actual cost you are going to incur in the future, but on an average, you will know what cost you will incur in the future. Take all that cost you will incur throughout the entire process, divided by the total number of units you will sell throughout the entire process. Suppose initially design costs and all I incur 50 lakhs. Okay. And through the 5 years I will incur a variable cost of 1 crore. And through the 5 years I will incur a marketing cost of 50 lakhs. Total how much cost I will incur through the entire process? 2 crores. Entire 5 years of my product I will incur 2 crore rupees. I am expecting entire 5 years of my product I am expecting to sell 1 lakh units. I am expecting to sell 1 lakh units. What is the cost per unit? 2 crores divided by 1 lakh, what you will get? 2 crore rupees divided by 1 lakh, what you will get? 200. 200 rupees per, not 200. 2 lakhs, sorry. 2 lakhs, not 200. 200. So total overall, if you see 200 is the cost of one product. Now based on that I can set my selling price at 300 rupees or 350 rupees, whatever. At that point I don't have to see what is my cost. This month my cost might be 500 also. This month my cost might be 500. But overall cost is only 200. So I can set my selling price at 300, 350. At that point you don't have to think that, my cost this month is 500. I'm selling for 350 rupees, I'm getting loss. You don't have to think. Overall the life of the product you will get good profits. That is what you will see in life cycle costing. Understood? This month you might incur a cost of 50 rupees. Just because you incur only 50 rupees, you can't sell it at 60 rupees. Because your overall cost is 200 rupees. This month your cost might be 50 rupees. Or this month your cost might be 350 rupees. It doesn't matter. Your overall cost is 200 rupees. Set your selling price at 350 rupees. So you will get good profits. Understood? Throughout the life you will get profit. Understood? That is what we will do in life cycle. Most beautiful analysis. Beautiful analysis. Why iPhone and all is giving high prices? Because initially lot of research and development costs are incurred. Based on all that only they will set a selling price, because the research and development cost. GTA game. What is the price they are going to, what is the cost incurred to develop that game? GTA 6 is going to come. Do you have any idea what is the cost of that game? Okay. Is that cost of that game, cost of developing that game, is it more or less compared to Avengers movie you see now? All Avengers movie together. If you take some cost now, is it more or less compared to that? more. The cost is more compared to the construction of Burj Khalifa. The cost of developing the GTA 6 game is more compared to development of Burj Khalifa. Why so much cost they are incurring? The game has not come only yet. After the game came into existence, suppose the game they introduced today, from today their cost is very less. Their cost is printing the CD, that will not cost them 50 rupees. Can they keep it at 60 rupees? Cost of printing the CD is 50 rupees. Can they sell the CD at 60 rupees? Overall cost they will take. Initially how much they incurred, future how much they incurred, they will take everything together. They will divide it by total how much units they will be ready to sell. They will be able to sell. They will see based on that they will set a cost per product. The cost of developing the game is more than the cost of building Burj Khalifa, the tallest building in the world. What is the reason? Research and development. Main cost, research and development and all, they will incur everything in labor costs. Any profit of design cost, everything, they will pay to the developers of the game, they will pay per year, they will pay $1 million salary. Developers of GTA game, the salary per year per person will be $1 million or $600,000, that is $6 lakh. One person is $1 million, means even if they employ 100 people who is developing the game, 100 into 1 million, how much will get? $100 million 1 year their salary alone. This game they are developing for the past 5-6 years. I would think how much they have incurred. For that they have to take a place on rent. Rent they will be paying in $1 million. The external cost is taken into consideration. No, they can't see that month cost alone. This month I incurred so and so cost. This month I incurred so and so cost. So I can set my salary based on that month's cost. Total cost will set it. That is what we will do. Life cycle costing. Overall cost I am expecting to incur over my life cycle of my product divided by total number of units I am expecting to sell over the life cycle of my product. You will get the life cycle cost of the product. Understood? Now come to tested understanding question number 8. Come to tested understanding question number 8. What have they given? What are the, we have 5 stages of a product. We will go through this in detail. We have development stage, launch stage, growth stage, maturity and decline. We have 5 stages of a product. Initially we incurred a research and development cost of $20 million. In year 1, launch phase, we incurred $5 million marketing, and production cost is 1 rupee per product, $1 per product. How many units are we selling or producing? 1 million units we are producing. Into per unit, what is the cost? Per unit, $1. 1 million units into $1. So first year your total production cost is $1 million. What is the marketing cost? $5 million. Understood? Second year same we have to find out. Third year find out. Fourth year find out. Growth, maturity, decline. Find out total for all the years. Added, divided by the total number of units. Now what is the total number of units? 20. 10 plus 1 plus 5 plus 4. Total is 20 million units. Total cost divided by total number of units. You will get the cost per unit. Understood? What have they given? Look below. The launch price is growing, is proving whatever. The marketing manager is keen to start with a low price of $8. The marketing manager wants to keep the price at $8 rupees to gain new buyers and achieve market share. The accountant is saying that it does not cover the cost during the launch phase and has provided the following. He is saying, so launch phase we incurred how much? $20 million in R&D. He is saying 4 years we will have a 20 divided by 4 per year is $5 million. Marketing cost for launch phase how much? $5 million. He is taking that. Production cost for launch phase how much? 1 million. He is taking that also. He is saying the total cost is $11 million per year for first year. They are selling 1 million products. 11 million divided by 1 million, the cost is coming to $11. The cost is coming to $11. How can you sell it at $8? We can't even cover our cost like that. The marketing was like that. The accountant is saying. We have to see what the accountant is saying, right or not, by doing the life cycle cost of the product. We will see the life cycle cost of the product. We will add all possible costs. First, what cost we have? R&D. How much? 20 million. Second, what cost we have?
Marketing cost.
What is the total marketing cost? 5 plus 4 plus 3 plus 0.9. How much you have? 12.9. Next, what cost we have? Production cost. What is the total production cost? 1 into 1 million is 1 million. 0.9 into 5 is? 0.9 into 5 is? 4.5 million. 0.8 into 10 is? 8 million. 0.5 into 4 is? 2 million. If you add everything, what are you getting? 15.5. Yeah. So not only this, including the other two. Huh? No, you are saying 15.5 is the production cost. No, I am asking for all cost, including R&D and marketing. How much? 48.4 million is the total total cost. R&D, production, everything. We'll take all costs we see. How many units are selling in total? 20 million. 1 million plus 5 million plus 10 million, 4 million. Divided by 20 million. So how much are you getting? So technically, if you see, overall life of the product, the cost is only 2.42. Now you tell me, can we sell it at 8 rupees? No. We can sell it at 8 rupees. Overall cost, if you see, is only 2.42. We sell it at 8 rupees, we will still get profit. Don't see today's cost. Today our marketing cost will be more because we just introduced the product. Initial phase, marketing cost will be more because we just introduced the product. Don't look at today's cost and decide. Understood? Look at overall cost. Understood? So, accountant is wrong. Marketing manager, $8 he wants to sell, we can sell, no problem, because the cost is only 2.4. We'll still get huge profit. Our margin is more than 300%. Understood? We can still do it. Understood, all of you? This is what we will do under life cycle costing. Yes or no? We will see this one thing and then we'll give a break. We will see this one thing and then we'll give a break. Okay, now we will see products life cycle and what cost we will incur in that specific product life cycle. You will see. So first is product development phase, launch phase, growth phase, maturity, decline. Tell again. Product development phase, launch phase, growth phase, maturity, decline. Normally what you would have seen is launch, that is introduction. You would have seen as launch or introduction stage, growth, maturity, decline. But here we have another stage called as product development stage. Before we launch the product, we'll initially do R&D cost to know what GTA 6 is doing today. That we will see. So what are the 5 stages? Product development stage, launch stage, growth stage, maturity and decline. What happens is we'll start with product development stage or pre-production stage. We have not started producing a product. We are just developing a product. We are designing a product. So what happens here is we will incur a lot of setup costs. We have to build a factory. We have to take a place on rent. We have to give employees salary. A lot of setup costs will be, we have to buy computers and keep. A lot of setup costs will be incurred. Research and development costs will be incurred. Design costs will be incurred. 3 costs you say. What are 3 costs you will incur development stage? First is setup. And if you do setup, you can do research and development. First is setup. Then you will do research and development. 1 year development, then you will design. What is first step? Setup, research and R&D, design. So in development stage, with these costs will incur. Next is launch, setup, R&D, design. Next we have launch stage. In launch stage, what will cost you will incur? You are launching the product. What will cost you will incur? Main cost, you launch the product now. For customers to know your product, you have to do marketing and promotion costs. In Chennai, you tell any new product came and new marketing came. I also don't know. I'm just asking. In Chennai, did any new product come? Which shampoo? In Chennai, they're starting marketing. Okay, like that, some new product will come. If new product comes throughout the Chennai, if you see, Kinnap, KYN. K1 is know your neighborhood. So the app they'll tell what is happening in the neighborhood, what events are happening, that and all. So the app they launched, it's been 1 year. So last 1 year they're doing extensive marketing. Wherever you go, you can see their name board, this thing, that thing. So in year 1 or the starting phase, in the introduction stage, you have to do a lot of marketing and promotion costs. Understood? So what the first one you will do? Not normal marketing. Every year you're doing marketing, but first you do extensive marketing and promotion cost. So introduction stage, the growth stage, introduction stage, the launch stage, what you will do?
Extensive marketing and production.
Second is production cost per unit will be higher. Why? Initially, no one will give us discount. You're going and buying material from supplier. Now, I'll give you discount. You're just starting. After a few seasons, they'll give discount. So production cost per unit will be more. Understood? And normally we'll allocate fixed cost to production units. No. Number of units is less. So the number of the fixed cost you allocate also will be more. So production cost per unit will be more. So what are the two costs incurred in introduction stage or launch stage? Extensive marketing and promotion expense. Second is production cost per unit is more. Second is production cost per unit is more. Understood? What are the costs you will incur in introduction stage, development stage? Setup cost. Then you will do R&D. Then you will do design. In launch phase, what you will do? Extensive marketing and promotion costs. And second is production cost per unit is more. Next, coming to growth stage. You think and don't look at the book. You think and growth stage, what you will do? You're growing. What you will do? You will still do marketing and promotion. Promotion will come under discount. Discount will come under promotion. You will still do marketing, not extensive marketing and promotion, but you will still do. You will continue with marketing. You can't stop. You will continue with marketing and promotion. What happens? What happens to your production cost per unit? Reduce. It will reduce because of two reasons. As you are producing more units, the supplier will give you discount. Because of more units, you will get economies of scale. Because of producing more units, you will get economies of scale, and the fixed cost they are absorbing. No, as you are producing more units, only less cost will be absorbed. So because of the production cost per unit will reduce. So what are the two things under growth stage? Marketing and promotion will continue. Production cost per unit will reduce because of two reasons. What and all? Economies of scale. The word to use economies of scale. Economies of scale is because of the scale. We will get more benefits. That is called as economies of scale. First, two reasons. Production cost per unit will reduce because of two reasons. First is economies of scale. Second is fixed overheads absorbed will be less. Fixed overheads absorbed by the products will be less because of more units you are producing. Understand? That is growth stage. Fourth stage is maturity stage. What do you mean maturity? I'll tell you how it works. Development stage will be below, a negative. Introduction, growth will go like this. Steep. Growth will go like this. Maturity also will go, but it will be higher. Highest point is maturity. Now maturity, when I tell maturity, they'll think matured, product has gone, they'll think. Maturity is highest point. It's not growing, but we've reached our peak. We've reached our peak in maturity stage. Be very careful. As soon as what they'll think, once they hear the term maturity, they'll think it's matured, the product started reducing, they'll think no, maturity is a peak point. They started maturing. It's still increasing, but slowly it is increasing. Not much increase and all. So what happens there? What happens there? Maximum profit you will get. That is the point where you will get maximum profit. What happens to marketing costs? Very, very important. When the product is maturing, you will have economies of scale, you will have, because it's still selling more units. And one very important product, a very important problem is, by this time, by maturity time, why has the product matured? More competitors have come. Initially, you are the only person to sell. You have great initial huge growth you got, but now more competitors have come. More competitors has come now to stand out. You're still getting huge profit. Don't give up on a product. Don't give up. You're still getting good profits. What you should do? Do more marketing now. More than growth stage. Less than launch phase, but more than growth stage. Do more marketing, because now we have competitors. Now is the time you have to prove yourself. Last marketing we'll do at this phase only. Understood? We'll do good marketing to stay on par with competitors. Then we can sustain a long time and all. After that, you will go to what happens to cost per production cost per unit? It reduces only, same only, it reduces because the maturity also more number of units will produce. Top way. Because of economies of scale, it will be reduced only. Understood? So three things happen in maturity stage. What all happens? profits will be huge. Second, increase your marketing and promotion costs. Third, production cost per unit will be less because of economies of scale. Same thing as above you can write. And in declining stage, when your product starts to decline, don't start to market your product. Marketing and all will start to reduce. It's cut out. When it started declining, we can't do anything. It's out of our hands. Same thing we can do marketing again and again and again and again. What generally happens? Marketing cost we will cut out. Economies of scale. Production cost. What happens to production cost? What happens to production costs? It will start increasing because number of units will start reducing. The economies of scale which we used to get will start reducing. First, marketing cost is cut off, not reduces. We cut off marketing costs. Second one is production cost starts increasing because we will not get economies of scale. What do you have to do at this point? Technically, what do you have to do at this point? Two things we can do. Either close and start to innovate a new product, or this product we can add more features and give. Understood? If I am providing classes now, I can keep providing the same classes for 5 years, 6 years. Competitors will come. What I have to do at declining stage, when it starts declining, I should either close this, start something fresh, a bigger portion or whatever, or what I can do, existing, I can see what I can develop and start to improve the product. Try to do research and development, improve the existing product, or close the product, start to develop a new product. This is what you will do in these 5 stages. Please go through for 5 minutes and then you can take a break. This is what is the 5 stages. What are the 5? We'll start. What are the 5 cycles we saw? Life cycle of product. Also development. Before launching, you'll develop your product. Launch phase, growth phase, maturity phase, decline phase. Which is the highest peak point here? Maturity phase. Maturity, people think product is closed. No. We've gone to the peak and we're staying in our peak now. And that is maturity phase. Now, we will see. I have a pen. How do we maximize a product's return over life cycle? We are going to see. For product, suppose it goes through 5 years. These days, maximum 5 years only. Whatever product you take, its life cycle will be not more than 5 years. Any product for the matter. Maximum life of product will have only 5 years. In that 5 years, how we can maximize the product's return? The 5 years, what and all we can use to maximize the product return is what we are going to see. First, design cost. First is design cost. Design cost is very critical for 2 reasons. Design cost is very critical for 2 reasons. First is design cost is very big overhead which we incur initially before start of the product. You can design the product now. iPhone is going to come into existence. To design that iPhone, how the camera should be, how this should be, inside how it should be, they incur a lot of cost. First, they should try to save cost on that. And the majority of the cost, if you see, majority of the cost will go in design only. Production variable cost less. Initially, research and development design cost is one of the major costs which incur initially. So that we should make sure we reduce because major costs. Second, what we can do is, suppose we are making a phone. We have a machinery now. The phone is going through the machinery. Then this is happening. Then one process happening. Then one process. Then one process happening. And phone is coming out. This is how a phone is being manufactured. Listen very carefully. This is how a phone is generally manufactured. It's going through various processes and comes out. You can see, you should see if through any of the process we can make it more efficient. Any of the process you see in this 5-6 processes, because for example, my phone is going inside, this machine is cutting the steel and half of steel is getting wasted. And next is going to this, I am putting the glass on top of it. In this machine, 1 out of every 1,000 screens are getting wasted. Next, if something will happen in every process. We can see if we can change the design of the machine only. Because if you are able to save 10 rupees in one phone, if you are able to save 10 rupees, some wastage you are able to save because of the design. Some machinery is that, listen to me, some machinery is that That machinery is design only I'm changing. Instead of using used machinery, I'm using a better machine. Because of me using that machine, I should see if I can save even 1 rupee or 10 rupees. If I save 10 rupees in one machine or in the product, from one product, overall life cycle of the product, I would have sold close to 10 crore, 20 crores iPhone. 20 crore iPhone into 10 rupees, 200 crores you're saving just by saving the design of the machine. Understood? We should see if we can do that. If you do that now, overall return you will save in your product's life cycle. Understood? So we are going to see 4 points where over the entire life cycle of the product, how we can improve our return. Today, how you want to improve our return? Today, what you will see? I will tell I can increase my selling price, or I can see if I can produce a less cost. But we are going to see ways in which we can improve the return of the product through the entire life cycle. So initial design cost, if you make some changes, so the entire life cycle changes will be there. Suppose phone I manufactured, extra one component I kept in the right side. Extra one component I kept in the right side which customers don't use only. Summa I kept. It's a non-valid identity. See if we can take the design out of the product. Just because of taking the design, if it costs 200 rupees a design, if you take the design outside, if it's not required, what happens? 210 crore products, you will save so much amount. iPhone, what they did? They removed the charger. It's not required. Everyone already has a charger. The charger, adapter they removed. When did they remove that? After launching the product, before? When did they remove that? When did they decide that they have to remove the adapter? Before launching iPhone 15 or iPhone 13, I don't know when they started removing it. Before iPhone 13, they sat and they decided, okay, this is design cost we will remove. It's not required. Because of them removing that cost in the initial phase of iPhone, that will cost them 500 rupees. 10 crore products they sold now, 5,000 crores they saved just because of having some changes in the design stage only. So they maximize overall products return just by saving some cost in the design stage only. So this is what is the first point. Design cost. Understood? Second, minimize the time to market. You don't have to see anything. Just listen to me. Minimize the time to market. These days, it is very dynamic. You're manufacturing something. AI came. ChatGPT came. Within a matter of time, everyone came into market. A lot of AI apps came into market. So, we try to minimize the time to market as much as possible. iPhone is bringing the next phone now. Employ more people, design faster, try to get your next iPhone as soon as possible, because if you don't release some phone, someone else release the other phone. Understood? We will take Samsung and we'll take Redmi and Oppo. They are giving same price products. Suppose Redmi has launched a new transparent phone. Redmi has launched. Try to bring it to the market as soon as possible, because everyone they are waiting to just upgrade and bring new technologies. You don't have to wait. Normally, what will customers say? Wait and introduce one product every 2 years and they will say. But that's not how it works. Whenever you introduce a product, just introduce the market. Transparent phone, you understood. Bring it to the market. If you don't bring it, someone else will bring it. Understood? So try to bring your product to the market as soon as possible. That is the second point. With that, you can maximize your return. Now, before another person comes, you'll be the only player in the market. You can see huge returns. Once another person comes, the entire customers will get diverted. You can make much money only when you are the only seller or this thing in the market. After that, your customers will get diverted. Understood? So minimize the time to market. The second one. What is the first point? Design cost. What is the second point? Minimize the time to market. Third point, minimize the break-even point. How can you minimize the break-even point? Using break-even formula, you tell me, how can you minimize the break-even point? First, selling price per unit we can increase high. Selling price per unit, you can keep it high. If selling price per unit is high, your contribution will be higher. Fixed cost divided by contribution per unit when you do, the break-even units will reduce. Understood? You increase the selling price, what happens? Contribution per unit increases. Fixed cost divided by contribution per unit when you do, your break-even units reduces. So you can minimize the break-even point by increasing the selling price. Second thing you can do is, by reducing the selling price also, you can minimize the break-even point. How is? If you reduce the selling price, your break-even units increases. Yes. When you reduce the selling price, contribution reduces, your break-even units also increases. But what happens is because you reducing the selling price, more units you'll be able to sell. So soon you'll be able to achieve the break-even point. So break-even point, there are two factors. Either you can minimize the break-even units or you can achieve it sooner. So under minimizing the break-even point, you have two things. What and all? Minimize the break-even units by increasing the selling price per unit, or achieve the break-even units sooner by decreasing the selling price and selling more units. Understood? This is the third point called minimize the break-even point. Fourth point is try to maximize the length of the life cycle. What do you mean by this? Because you've invested so much in research and development and design cost now. You try to see if you can increase the life cycle of the product. How can you increase the life cycle of the product? When your product reaches the maturity stage, don't stop there. Don't stop and close. After that, go declining stage. Once it goes to declining stage, it's gone. Once it reaches the maturity stage, see if you can do any extra additions to the product. Understood? You don't need to create a new product, but at least see if you can do any extra additions to the product, increase the life cycle of the product. Now, initially, we did a lot of research and development. GTC, how much they've invested on research and development and programming and whatever initial cost. They try to see if they can increase the life cycle of the product. The GTA 5 came out. You think they'll leave GTA 5 as it is? Every day, they will try to bring some update in the game. Every day, they'll try to bring some update in the game. Until they bring GTA 6, in GTA 5, they'll try to bring some update, they'll try to fix some. So, try to bring some addition so that the product does not get stagnant. Understood? Try to bring some more additions. What game we can do? Take PUBG for example. How it was when they initially started, how it is today. Lot of new maps they are bringing out. If they don't bring out new maps, what will happen? Some new game will come and customers will stop using this game. They'll go to other games. Even though your game is good or whatever, try to bring some additions when the product goes to the maturity stage. That's when you can increase the length of the life cycle of your product. Understood? So what are the four stages in which you can maximize return over the entire life cycle of the product? What is the first point? Design cost. Second point. Huh? Minimize the time you get to the market. Minimize the time you get the product to the market. If you design it, try to get as soon as possible. Employ more labor, manufacture rapidly, and try to get it as soon as possible to the market. Third one. Minimize the break-even point. What are the two ways in which you can do? Increase the selling price, contribution will increase, your break-even units will reduce. Second, decrease in selling price, break-even units will increase, but you will sell more units and you can achieve the break-even point sooner. And so these two you can tell. This is the 4 points you can say from maximizing the return from the product's life cycle. What people will tell? How will you maximize the return of a product in a product life cycle is given? They will increase the selling price of the product and decrease the cost of the product. But the important word here is over the life cycle. These are the 4 things we have to do into an order increase. Understood? A very, very important point. Understood? Let me ask an MCQ. Come to illustration number 5. Come to illustration number 5. I don't know what illustration is called in your book. Enrono company. Enrono Zara. Come to illustration number 5. What is the product's life cycle? What is the product's life cycle? 6-year product. Believe me, life cycle costing practical questions is very, very, very easy. Nothing will be there. I'll tell you how. I'll tell you why. Following costs they have given for 6 years. How will you find the cost per unit of a line? I guess total cost divided by total number of units you're expecting to sell. What is the total cost? Literally add all years cost. These are the costs given to us. You add all year 275 plus 120 plus 120 plus 200 plus 200 plus 125. Add all the costs you see here that they've given below. Total life cycle cost is 1560 divided by the number of units you're expecting to sell. Divided by the number of units you're expecting to sell throughout the entire life cycle. We'll get the cost per unit. Understood? It's just an example they give us. Nothing you have to know here. Understood all of you? Yes or no? Second question they are asking is, how can we price our product through the 4 stages? 5 stages we saw, but after introducing only you can price the products. Launch phase. What you can price the product at? Transparent phone I'm getting. What you can launch it at? Launch phase. Mostly we'll try to use market skimming approach. Launch phase, keep your market higher. Launch phase, keep your market higher because you are the only one in the market, no one else is in the market. Keep your market higher because initially huge research and development costs you have incurred. You have to recover that. Keep your prices higher. Then growth stage, what happens? More customers will come. When more customers comes, reduce the product, reduce the price of the product. Then maturity stage, what you have to do? Maturity stage, more reduce, we can't do anything. Try to maintain it. Reduction in price, try to, you need not reduce more than, try to maintain it. And decline stage, if you want to continue, it started declining. Now if you want to continue, your only advantage is to reduce price. If not, close the product and go. Understood? ChatGPT, when they came, it was 2,000 rupees, 20,000 rupees. Next, they introduced new plans at 300 rupees or 400 rupees. Now they are for 400 rupees. Now they're going to make it free. From 2,000 to 400, now they're going to make it free. Understood? So initially you have to reduce in order to cope with the competition. Understood or not? This is what you have to do. Nothing more you have to remember. Nothing is required. Come down, come down. Life cycle costing serves in industry. Nothing is there. Nothing you have to go through. Just come down, come down, come down. Come to benefits of life cycle costing. Come to benefits of life cycle costing. You will see 3 benefits, 3 to 4 benefits you will see. Come to benefits of life cycle costing. You will see 3 to 4 benefits. It will be dry only. Nothing is the same thing. You go inside and see. Same all costs they will add divided by how much we are going to see. You will see. That's it. Nothing more is there. Understood? This is another concept. Come to benefits of life cycle costing. Very, very important. First one is it draws management attention to all costs. Normally, when you talk about costs, I am the CEO. I am asking the manager. He is telling me, sir, this month we incur this much cost. That month we incur that much cost. But here, it tells us what we are incurring throughout the life cycle of the product. I gave you an example. No, you see today's cost alone. If you set the price of the product, it will be more or less. But you have to set the price of your product based on taking all the costs you incur throughout the life cycle of the product. Understood? So it draws management's attention to. Also, we can tell it shows all the possible costs. It helps us recognize. It recognizes all possible costs. What is the first point? What is the first point? Recognizes all possible costs. Second, it tells us it measures the product's cost from concept to withdrawal. Close your books. You don't have to see anything. Close your books and give. Just visualize. What I see, visualize. It measures the product's cost from concept. What is concept? Idea. Today we are coming and telling we are going to manufacture iPhone 17. From today, whatever costs we incur from that phase till we stop the manufacturing of iPhone 17, all costs it will take into consideration. It includes all costs from concept to withdrawal. It includes all costs from concept to withdrawal. What is the first point? Recognizes all costs. Second point is includes costs from concept to withdrawal. Understood? Third, it focuses on long-term return or short-term return. It focuses on long-term return. It focuses on long-term return. What is the first point? Recognizes all costs. Second, it includes concept to withdrawal. Third point, focus on long-term. Helps to make better decisions. Helps to make better decisions. Understood? These are the 4 points you will see under benefits of life cycle costing. Repeat all of you. What are the 4 points? All costs to withdrawal. Third, better decision. Understood? This is what you will see here. Nothing more with that. Now we can move to the concept called as environmental management accounting. Short one theory question you get from this. Environmental management accounting. First, we have to know. It might look very easy, but some concepts you have to know here and there. First, we have to know what is environmental management accounting. You tell me, what do you know about environmental management accounting? What is management accounting? No? What we are doing now is, the subject we are doing now is, another name for it is management accounting only. It is an extension of management accounting. Management accounting is the easier version. This is a more complex version. Here they are saying take environmental factors also into consideration. When you're taking the cost you incur, you take into environmental cost also take into consideration. And going to produce a product, don't see only how much cost you will incur, how much you will sell it for, and how much is your profit. Take into consideration the environment also. Understood? That is what you're going to see for the next few concepts. First thing is, on long term, we're going to see a few factors. What and nothing you have to mug up here. Just remember it as a story. All of that. First is, all organizations, if you see, they're facing a lot of legal and regulatory requirements relating to environment these days. A lot of organizations, they're facing legal and regulatory requirements. Sterlite, they opened, they put a case on them, they closed Sterlite. Not only them, a lot of Adani, they want to open some factory somewhere now. They're protesting and they're saying because of opening the factory, the farming is getting affected. After they're not letting them do that. So they're faced by legal and regulatory requirements. Second, they need to meet the customers' demand related to environment. This is, if you see, customers are asking for environmental friendly packing. That's when you open and see recyclable plastic, environment friendly packing, environment friendly clothes, egg. You know, there is cage free chicken egg. Then how much it costs? One cage free chicken egg, and how much it costs? Yes, same chicken, one egg. How much is a normal one egg cost? 5 to 6 rupees. Cage free chicken egg costs 35 rupees. Same white color egg, but they let the chickens run in the field. For that they're giving us 35 rupees the egg cost. Understood? Customers are requiring that. Customers want that. They're buying a shirt now. They're buying a shirt that's environment friendly. They don't want artificial dyes. They don't want a shirt which has polluted the environment. They want to use organic dyes so that water is not getting polluted. That's all they're seeing. So you need to meet the customer's demand also when you're taking everything. Third, you have to do this in order not only for customer needs. You have to do this even for having better public image. In public, if you have to have good image now, you have to do all these. So if just keep running, nothing will happen. You have to make sure, you have to show the public you're doing all these also. Understood? Fourth, environmental costs are not only this cost. Because of environmental disasters, you will incur some cost also. That will also come under here. Take that also consideration. If you're going to start a business in Chennai now, take into that cost also in consideration. This during December time, Chennai will get flooded. During December time, Chennai will get rains. Because of that, sales will get affected. Take that also into consideration. Don't see only what you incur. See what you're going to incur also based on what environmental disaster is going to happen to the company. Understood? These are a few things you have to know. Enough. How can we do all these? Yes, sir. I'm telling to take care of all these, what and all you should do. We saw what are the problems. To take care of these, what and all we have to do, we will see. First, identify and estimate the cost. First, you need to know what are the environmental costs. Environmental costs is, you are some company, shirt manufacturing company. You're manufacturing shirts. Waste water is there, no. Where will you put the wastewater? Shirt manufacturing company, lot of water you will waste. Where will the company directly put the wastewater? They will not. The government will not allow you to put the entire water in the sewage. Sewage only they will not allow. While they will allow you to put it in the sea. If they'll tell you to again treat it and put the good water in the sewage, or if you're putting it in the sewage, you have to pay some amount for that. Or disposing that water in the sewage, you have to pay some amount to government. You can't just like this, put it somewhere in the sewage or whatever. The government will take everything. For that, you have to identify and estimate the cost of that. What we have estimated? We have estimated the cost of raw material, labor, this and all you have seen. we've never seen in entire all these chapters we did, we never seen what the costs are incurring after manufacturing the product. That you have to first identify and then estimate. Understood? Second, initially capital investment decision you'll take now. What is capital investment decision? Is we have seen FM. Capital investment decision. Big capital we need. We're going to start a business. We'll see no. We need 1 lakh for this. We need 5 lakhs for this. We need 10 lakhs for this. Like that. Allocate some amount for environmental this thing also. Allocate some amount for environmental consideration also. For example, allocate some amount to have a wastewater plant treatment in your company. Allocate some amount to get good machinery so that there will not be much wastage. Understood? Environmental related costs will not only increase your cost, it will reduce your cost also. Instead of giving so much packing for your products, cut all the costs, just give one paper bag. You are cutting your costs. Customers are also happy. Government is also happy. Environmental costs you are saving. Understood? This and all you can do in order to save. This and all they'll ask only MCQ. Don't worry, just go through this one. Understood? We'll just one more concept and then I will close today's class. I don't want to take more theory, not close today's class, close this theory for now. I don't want to take theory. Okay. How does environmental management accounting impact your financial performance? The impact of financial performance in 4 ways. With this, I'll close theory. Okay. First, they will improve your revenue. How will they improve your revenue? Because of this, how will they improve your revenue? Exactly. These days, customers are preferring more environmental related products. Someone is selling one shirt for 100 rupees. Other person is also selling for 100 rupees. But one is saying environmental friendly product now. Everyone will go to the other person only. Increase sales because of customer will get more awareness of the product and will increase your sales. Second, cost reductions. How will you have cost reductions because of this? Cutting down bags, unnecessary wastage usage, close on bags. Second, when you focus more environmental this thing, no. Earlier, what used to happen is, for example, a lot of electricity we used to waste. Now, what happened? Because of environmental concerns, we are looking at to reduce electricity. First, you are looking to reduce electricity for environmental concerns. Because of the costs also will get reduced. So, you'll have cost reductions also. Either paper bags you can put instead of all those fancy packing. Second, electricity you can save. Some cost reductions will also happen because of environmental management. Understood? What is the first one? Increase. Second one? Third is increase in cost. Increase in cost also will happen because you have to buy a wastewater plant. You have a lot of legal and regulatory requirements to do. You have to comply. Sir, I've used only this much energy. I use only this much water. You have to comply. For that, you employ a person. You have to employ a lawyer for that. Yes, sit and comply. That and all you have to do. Understood? The cost will increase also. And last one is costs of failure. What is cost of failure? Is you manufactured. The government told you not to do this, not to do that. But what you do, you manufactured. From your manufacturing, a lot of smoke has emitted. You have some limits, you know that no. How much smoke you can emit, you have some limits. More than you have to pay to the government. You have to pay fines, you have to pay that to the government. What you do a lot of manufacturing and a lot of smoke you emitted. After that, government is coming and asking, this much smoke you emitted in the company, no. Give me this much amount, the government is asking you. That is called as cost of failure. Once you manufactured, after that, that became a failure. That emitting gas became a failure. Government came and put penalty and fine on you. That is called as cost of failure. These are the 4 things in environmental management will have impact on your financial performance. What are the 4 things? Improving revenue, cost reduction, increase in cost, and cost of failure. Understood? Understood. Time is exactly 9:45. You will take a break till 9:15. Eat your breakfast and come. Then I will tell you what to do. We will not do any more theory today. That we will take it on extra. Understood? Wash your face, get fresh and come. I want you to be fresh after 10:15. Ready?